So, hello students, this is Dr. T.G. Uma. Now I am with session 9 in advanced corporate accounting. I shall be discussing a problem on redemption of preference shares, covering the bonus issue of shares. So now let us understand the meaning of issue of bonus shares. So when will the company issue a bonus shares? When a company is existing for a very long time and is able to make profits for a very long time, so it would just think about capitalizing the profits. So that is a time that it will think about issuing the bonus shares to the existing equity shareholders. So this is one way where the company capitalizes its profits. So the provisions that we have under the income Companies Act regarding the issue of bonus shares are: you need to seek the permission from the SEBI, and there need to be provisions in the articles of association. Annual general body meeting has to be convened and the proposal need to be ratified. Then there should be unissued shares to issue the bonus shares, and apart from that the memorandum of association has to be amended. So these are all the provisions that we have under the Companies Act for the issue of bonus shares. Now I shall be discussing about the redemption of preference shares. Now let us go with this problem. So you are having the liability side where you have the share capital consisting of the 3,006% redeemable preference shares and the equity shares to the tune of 30,000 and 60,000 rupees, and you have the share premium account, general reserves, and P&L account. So these are all the ones which we use to issue the bonus shares. So we need to be having sufficiently good amount of the capital profits in the organization. So coming down to the assets, you have the fixed assets, investments, current assets. So under that you have stock, debtors, and cash at bank. So speaking about the adjustments, the company exercised its option to redeem on 1st April 2015. So the whole preference shares are redeemed at a premium of 5%. So here to assist the financing arrangement, so they have sold the investments at 19,500 rupees. Now the company has made a bonus issue of 7 shares for fully paid up for 6 equity shares held on that date. So here everything was completed. So we have to draw the journal entries and uh, give effect to the transactions and present the balance sheet. Now let us go with the journal entry. So here the company is making an investment, right? Sorry, is selling the investments. The book value of the investments is 21,000. So they have been realizing 19,500. So this 1,500 is a loss on the sale of investment. So this loss, we have to transfer it to the P&L account. Okay, so here next is 6% redeemable. This is actually the capital part that is there. So this premium is extra that we are due with 5%, so 1,500. So if we add up the amount, 31,000 is a preference shareholders amount that is due. So next one is general reserve account debtor to the capital redemption reserve. So this is the general reserves that we find in the balance sheet. Same is transferred to the capital redemption reserve. So 30,000 is transferred, and you have the securities premium account which will be used for the payment of the premium on the redemption account. So securities premium will be used to pay the premium and issue of bonus shares. Those are all the two things which we can use. So next is profit and loss account debtor to loss on sale of investments. I told you in the first transaction there was a loss. This has to be closed by transferring the loss to the pre-P&L account, and preference shareholders account debtor to bank account. This is the payment that we make to the preference shareholders. Now the bonus to the existing shareholders is that 6,000 shareholders will get 7,000 uh, bonus shares. This 7,000 we are allowed to take money from the profits that we capital profits that we have in the balance sheet. So here first we have to take capital redemption reserve. This capital redemption reserve account is created by transferring the amount from general reserve towards the payment of the redeemable preference shares. The 30,000 is there. The general reserve we are having 40,000, right? So out of the general reserve, 30,000 is transferred to capital redemption reserve and we are left with 30,000. And share premium account, as I told you, it can be used to pay the premium on the preference shareholders. and the issue of bonus share. So 1,500 is already used now to redeem the preference shareholders. So 1,500 we'll have to take out, and we are left with 27,500. So here, if you add up all this is the balancing figure that we take up from the P&L account, and the bonus to the shareholders, existing shareholders, is taken care of. Finally, bonus shareholders account data to equity share capital. This is a entry that is transferred. So there is no cash transactions that at all as far the bonus issue is concerned. It's only that the capital profits will be taken up. That is the reason that you will not have any account in terms of the bank transactions here. So going on further, now let us look into the balance sheet, how it appears. So shareholders funds, you will have share capital and the reserves and surplus. So 1,30,000 and 20,500. So here we will have to take up this general reserve, which is already there here, and the amount that is transferred, is it not? So that is how this is taken care of. So finally we are left with 20,500. So then apart from this, there are trade payables, so that will be taken up 19,500. Going on further, there are non-current assets, fixed assets. So investment doesn't come because we have already sold it, right? So under the current assets, we have the inventories, trade receivables, and cash equivalents, which will be straight away taken up from the previous balance sheet that we have. Going on further, this is a note on like how we have been able to arrive at the balances that we have put in the balance sheet. So going with the equity share capital, previously we had 60,000 and there was 70,000 worth the bonus shares that were issued. So 60,000 plus 70,000 works out to 1,30,000, and the reserves and surplus. So 24,500 was existing in the company. So 1,500 is a loss that we have on the sale of investments. 2,500 is used to issue the bonus to the shareholders, equity shareholders. So that amount is taken out and we are left with 20,500. So there is no change at all as far trade payables are concerned. So that we are not touching upon at all. So investment doesn't come at all. That thing is very clear. Fixed assets are 1 lakh and that remains intact. Stock is 44,000. Salary debtors are 16,000. So coming down to the cash at bank, we had 22,000. There was sale of investments, out of which the company could realize 19,000, and 31,000 is the amount that you have paid to the preference shareholders. So this is about this particular problem. Thank you.